That time of the week where we talk about a specific fund that has done well, and Naren, who's CIO at ICICI Prudential AMC, joins us on Meet Your Fund Manager to discuss ICICI Prudential's Dynamic Fund. Naren, thanks very much for taking out the time and speaking with us. Now, the Dynamic Fund has given very good returns year to date and over 1 year as well as the 3-year period. How have you managed such an outperformance?
Actually, the dynamic strategy is very designed for volatile markets. It can actually make use of small caps and mid caps on a strategic basis. It can actually pick up sectors which have gone down, which can go up in the medium term. And also it is a fund which can actually sell markets as the markets become overvalued, and they buy stocks when the markets become cheaper. This strategy has benefited the fund from delivering outperformance in the last 1 year and 3 years.
Right. What is the mix between large caps and mid caps as part of this fund? You also have exposure to Standard Chartered IDR as part of the fund. Is that the mandate of the fund as well, that aside of cash positions, you can also invest in other instruments?
The fund has the benefit of being able to invest in debt and in equities, depending on what the market valuations are. We make use of our in-house proprietary formula to decide the quantum of equity position in the fund. And the fund consequently can invest in a wide range of securities, including IDRs. On the small and mid cap side, actually the fund can actually increase their allocation to small and mid caps when small and mid caps underperform. And when small and mid caps do very well, it can actually cut the allocation in small and mid caps and move to large caps. So it's got a very wide defined mandate.
There's been some interest coming back in mid caps and small caps. Asian global small caps as well as US small cap funds have also done well. We've been speaking about how the US small cap index, which is the Russell 200, has outperformed the benchmark Dow Jones and S&P 500. Do you think that now the focus will be on this segment of the market, the mid caps, and the outperformance there will continue?
I think we've just seen 3 months of good performance from mid caps. We can have a multi-year cycle in mid caps. It requires a better growth profile for the economy, and we've just seen 3 months of outperformance. One has almost forgotten the period from 2003 to 6, where for 3 successive years, actually mid caps had drastically outperformed large caps. Currently, the mid cap valuations are pretty attractive, so consequently, the scope for them outperforming large caps do exist.
Your holding include Infosys, ICICI Bank, etc. Now, what drives conviction in Infi in particular when TCS and HCL Tech have been better outperformers than IT? And likewise, HDFC and HDFC Bank have been better performers than ICICI.
We at ICICI Mutual Fund have a sector analyst to look at different sectors. The sector analyst does an in-depth analysis of many of these stocks in the sectors and comes up with the right stock to pick up in every sector, on the basis of which, we as fund managers look to the sector analyst for a specific stock idea. Sometimes it might appear that a stock has done well, but from a point of view of timing, we would have bought a particular stock at a particular price. Therefore, we got the outperformance, whereas on a 3-year basis, it is possible that some stocks have done. Instead of one stock in the benchmark, we could choose some other stock which has also done equally well as a replacement for that stock based on the views of the sector analyst. With this approach, we have had a very good experience in both the technology sector and the banking sector in picking up the stocks to hold and the stocks to avoid.